Hello and welcome to the CNBC TV 18 CEO Centimeter. Metals have seen a strong rally led by aluminum and nickel. What's the outlook for the sector? What's the outlook as far as oil and gas prices are concerned? And more importantly, what is the plan for Vedanta when it comes to expansion, when it comes to its capital allocation, its dividend payout policy, and more? To discuss all of that, we're now joined by the chairman of Vedanta, Anil Agarwal. Mr. Agarwal, many thanks for joining us. It's always a pleasure speaking with you. Let me start by asking you about what we are seeing as far as commodities are concerned, because that clearly is the focus of the market and of investors at this point in time. If I were to take a look at what's happened with zinc prices from February to the start of March 2022, we saw zinc prices go up by 28%. They are about 15% off their highs, but still up 9% from February of 2022. Similar story as far as aluminum is concerned. So let me ask you to explain to us your outlook as far as metal prices go.
Yeah, sure. India is in a very, very sweet spot at the moment because India geology, India production is increasing in natural resource. And as the overhaul, these last few years, no new mines has opened up. And there's a huge demand for these metal. As you talk about the aluminum, no new production has come. In fact, they're cutting down the production. As you've seen, zinc application is going very, very high, including the pharmaceutical. There used to be only 15-20% application on the naked steel. Now it's going as high as 60%. Every sector of commodities, including oil and gas. In oil and gas, people have a little bit ignored, but today seeing the price, it's very important to produce oil and gas. In coal is also very, very important. India is a very different position than the world. You know, if you look at, we can't be put into the same basket as the world is. Today, we have to be self-sufficient today as what we have seen in the geopolitical situation, whereby it is very important for us to be self-reliant, Atmanirbhar. And the most important sector is the natural resource sector because most of our allocation goes into the natural resource, whether it's coal, gold, oil, gas, fertilizer. So, and India has, as I've been telling last 10 years, that India has a phenomenal geology, and it is very important that we should explore more and more. I'm a geologist by practice, and I can see what geology we have, probably one of the best in the world. It is the time where
I get
massive
that.
jobs. Yeah. So,
right, Mr. Agarwal, I'm interrupting you. I'm interrupting you because, yes, you know, this has been your argument and this has been your hypothesis, as you point out, for the last 10 years that India has the natural resources, but these natural resources are yet to be fully tapped and fully exploited. But I want to understand from you, in terms of prices at this point in time, given the demand-supply situation, given the geopolitical developments, especially the conflict between Russia and Ukraine, how much headroom do you see for prices to move higher, or do you think that they will stabilize at these levels, especially when we talk about metals?
I think they will stabilize on this level, according to me, 10% plus minus. That's what I feel, because the world is little mature, and I thought initially there will be a lot of panic, but I think the world is more mature, and I could see the pricing is stabilizing around 10 to 15% plus and minus on these prices.
Okay, 12 to 15% plus or minus as far as these prices are concerned. Let me then ask you, Mr. Agarwal, about the outlook as far as Vedanta itself is concerned. You did do an investor meet, an analyst meet, where you have tried to address some of the concerns that investors have had. You've tried to explain what the strategy is going to be going forward. So let me pick up on one of the big assurances that you have made, which is debt reduction. And you've talked about being able to bring down your debt debt by $4 billion in 3 years. How confident do you feel about this, and what will be the path to this debt reduction specifically?
We have been, if you look at the total debt, Vedanta Resources and Vedanta Limited is $12.5 billion. And this is 1.5 year profit of our company. So in terms of debt equity ratio, we are very comfortable. But still, I assure that we have been dividend paying company from last so many years, 10 years we have been paying. We are very comfortable to upstream between $2 billion to $3 billion, upstream the dividend. So I'm very confident and very comfortable that we'll be able to reduce $4 billion. And I assured everybody we reduce $4 billion debt in 3 years' time. This is the complete assurance we have given them.
Yes, that is the assurance that you've given them. I'm looking at many analyst reports that have come in post that investor meet that you had. And the rough calculation that people are working with, since you spoke about upstreaming of dividends, is that with the upstreaming of dividends along with the interest servicing, that implies a dividend of about 58 rupees a share. Would that be what you're working with as well?
Yeah, I've not looked at the calculation, but I'm very confident. Once I make assurance, we never fail. We are very comfortable to upstream $4 billion and reduce the debt reduction. Apart from that, we have also, like you know, we have one of the largest asset of copper in Zambia, which illegally the last government has taken over from us and put in a receiver. We are in process of getting it back. That itself is a very large asset, and it is one of the largest copper and copper position. So we'll be able to get something from there. As you know, we have a technology company, Vedanta Resources. We have a transmission. So putting everything together, debt reduction is no issue of $4 billion.
Okay, debt reduction, you believe, will follow the path that you've guided. In the next 12 to 15 months, Mr. Agarwal, Vedanta Resources has a repayment of about $3.5 billion. How confident are you feeling in terms of being able to repay that, refinance it? What's the way forward on that front?
Yeah, we will be able to around $2 billion repay through the dividend, $1 billion we can roll out. There are so many ways we can do it. We are very comfortable rolling out. Every banks are, is a normal practice to roll over. So $1 billion will be able to roll over, and about $2 billion will repay.
Okay. All right. Let me then ask you if you've heard anything further from the government as far as the privatization process of BPCL is concerned. Has there been any communication? Has there been any movement forward on that front?
I have not heard anything, but the investor conference, I clarified that Vedanta has a huge credibility and a lot of interest in the BPCL with the Sovereign Wealth Fund and the various other funds. And they want us to come to manage this company. And we have said we will not put in Vedanta balance sheet to acquire any of the asset. At the moment, I have no idea because we have no date when they are going to ask for the bid. So whether it will take 1 year, 2 years, or 6 months, I have no idea. But we have very clearly said BPCL, if any opportunity comes, Vedanta balance sheet will not be used. All the fund will come independently. We are ready to manage the company. People are comfortable in the privatization, and we will charge our service charge, management fee. That will be good for our shareholder.
Right. Yes, well, we will have to wait to see what the government does do as far as BPCL is concerned, but that is an important clarification that's coming in from you, a reiteration, in fact. But Mr. Agarwal, speaking of clarifications as well as allaying shareholder apprehensions, one of the overhangs or one of the sort of concerns that has been around for a while now is the strategy regarding the group structure. You've gone back and forth on merger, demerger, delisting, and so on and so forth. So what should should one expect on this front? Is there any move towards any kind of restructuring in the foreseeable future, or have all of those plans now been put to rest for now?
Yeah, it is a very simple, it's like more or less on the Tata Sons model, where the Tata Sons is the private company, Vedanta Resources is a private company, and underneath you have a Vedanta Limited, you have a STL, which is a technology company, and Hindustan Zinc. We own 65% of Hindustan Zinc. The rest, the government will be selling the share, and we will not be buying those shares. It will go to the market. So this the only restructuring may happen is the Hindustan Zinc. Apart from that, there is nothing. It's a very straightforward.
Okay, and Hindustan Zinc, of course, is a matter, again, that is pending in court. So you will have to wait for clarity on that front as well. One of the other concerns that you have tried to allay is that there will be no more ICDs issued from the listed entity to the promoter group. You've tried to clarify on related party transactions as well. I just want a reiteration from you. Is that now a thing of the past? Are we likely to see any more of such related party transactions, or you're saying that that is no longer going to be the case?
Absolutely no longer. What we have done was also legally, but looking at the sentiment, we have put into the stock exchange a copy of that letter. Everybody has that letter where we have confirmed no such transaction will ever be take place.
Well, we will take a break, but when we return, we continue our conversation with Vedanta's Anil Agarwal on CEO Centimeter. Welcome back. You're watching the CEO Centimeter, and we're in conversation with Vedanta's Anil Agarwal. Let me now talk to you about growth and what you foresee as growth ideas and growth possibilities going forward, and what that will also mean in terms of capex across each of the businesses. You talked about India and the Atmanirbhar vision, but even when we talk about oil and gas, you have missed your guidance in terms of volume expansion between FY17 and FY21. So what should we realistically expect in each of your businesses as far as growth and capex is concerned?
No, we are very proud that this kind of asset to replicate is very, very difficult. We are in oil and gas. Last 10 years we have been working. It is one of the most beautiful field, and we produce sweet crude and the low sulfur crude. And the biggest important thing was government clearances. So I found this government is very positive and very high duty. So everything they are addressing, and we are looking as a longer term of the mining lease, so we can make an investment as a long term. You will be surprised that we supply oil all in together to less than $25 to the government. And India has a very 300 billion barrel of oil. I'm looking more and more investment to come in this sector, more and more investment to come. So oil is, we are looking to produce next year over 200,000 barrel next year, and we are looking third year to produce 300,000 barrel. In fact, I'm very ambitious. Can we do third year or fourth year 500,000 barrel, which is possible. Is all required government clearances, clarity. That is very, very important. But I'm very bullish on the oil and gas. We have produced gas.
But Mr. Agarwal, if I can interrupt you there, because once again, you're talking about 200,000 barrels, you're talking about 300,000 and then 500,000 barrels in terms of output for oil and gas. But I go back again to the concern that the street has that, volume guidance has been a miss between FY17 and FY21. So how confident do you feel this time around of being able to actually achieve these targets that you're setting out for us?
I think we have met the target. We have set 200,000 barrels. we have produced 170,000. There was a lot of hiccup on the clearances. That's why we couldn't produce. Otherwise, there was enough oil to produce. So this is something we are going through, and I am very confident that we should produce. India need oil and gas. Any country does not produce oil and gas is very vulnerable. So more and more, we are the only producer of oil and gas. We sustain ourselves 10 years in this field, and I'm very confident. I'm very nationalist, and I'm looking forward more and more oil and gas to be produced. So that is on the oil and gas. Now you can come to zinc.
Yeah.
Zinc, we were the 80% zinc used to import. Today we are self-sufficient because of Hindustan Zinc. There was a 40% duty. There is no duty. So we have been able to produce at $1,000 all in zinc. Very confident. We're the largest producer of zinc. We also have an asset in South Africa, which we are very proud. It is as big as Hindustan Zinc. So putting those zincs, there are only three main producer in the world for the zinc, ourselves, Glencore, one more company like a Tech Cominco. So we are in very good spot, very difficult to find zinc. So zinc is one thing which we have developed the technology in the same zinc. Also, we have developed the silver. Silver is again 100% import silver used to happen. Today, we are producing 10% of the silver of the country, 1,000 ton. We are going to produce probably one of the largest silver in the world. So very excited. I feel very good the kind of effort we make to do something impossible thing to produce silver into the country. Same thing with the aluminum. We are producing 3 million ton of aluminum, and which is at the moment we are producing 2.4 million ton. Next year we are going to produce 2.3 million ton, including coal to bauxite. So everything integrated to develop that. We feel very proud. Because of that, thousands of industries should come and develop the downstream product.
Right.
So these are the three areas where we get 90% of our profit. And then we have at least 6 or 7 areas which we are developing. Like we have a FACOR, which make raw material for stainless steel. We have a Nicomet, which is going to produce nickel. We have met coke, which is very important. So these are the areas which we are going to develop as big as this company. So this is a real natural resource company. In the world, every country has one natural resource company. As you know, BHP has from Australia, Vale from Brazil, Rio from UK. And I feel very proud that we could create Vedanta as a natural resource company out of India.
Well, away from natural resources, let me talk to you about your new engines of growth or potential growth, the semiconductor foray. If you can explain to us where things currently stand and how soon we can actually see that venture being operationalized.
Yeah, this is the engine for the world and for India, semiconductor. Semiconductor is a glass. We make optical fiber. We have a glass business. We also have make the fab in Korea, in Japan, in Taiwan. We took over this company 3 years back. So we have a glass culture in our company, and we are looking fab and the semiconductor both together. For the semiconductor, we have a tie-up with the Foxconn as a partner. They're coming they are one of the best, one of the largest, and first phase will be about $2 billion. We are looking location, so we have put in a independent team to find out, because we need water, we need infrastructure. Whoever is state come forward, I think within 30 days, 35 days, 40 days, we'll be able to pin down the location. We're looking to produce a semiconductor in 2 years' time, and within same time, we will be producing fab also, so we can make our own cell phone, we can make TV, we can make laptop, and it will be very nice. The price will reduce and a lot of job will be created. A cluster of electronic will be developed.
Okay, so you're saying that the first phase will entail an investment of about $2 billion and you're hoping to identify the location, etc., over the next month and a half. That's as far as the semiconductor foray is concerned. As far as your capital allocation policy goes, you've articulated clearly that it's going to be between capex, dividend and M&A. Is there anything on the anvil as far as M&A is concerned at this point in time? Is that, are you looking at any big ticket M&A as of today?
Not at all. We have a very strict capital allocation policy. We have allocated $1.5 billion to be spent every year. That is for across, and that should be sufficient for us for our capex, including semiconductor, including all the balancing thing which we are doing in aluminum, zinc, everywhere. So this is our very strict policy. We have nothing else apart from what I put before you.
Okay, nothing else apart from what you've put on the table. Mr. Agarwal, before I let you go, let me understand from you, what do you see as the potential risks at this point in time? Of course, as far as commodities are concerned, the upcycle continues, you're saying plus minus 12 to 15%. But what do you see as the big risks to your business as of today? And what would be the single biggest driver to growth as well?
We are entrepreneurs first generation. For us, there was nothing. We are very confident. We are the people who started that India has the resources. Nobody believed that India has the resources. We have proven that India has the resources in every sector. So as far as risk is concerned, I never seen the government support. What we are getting is phenomenal to start this. We are the lowest cost of producer of all our metal. So as far as the price is concerned, I don't see any risk. Geopolitical, I could see that we are in a very sweet spot because people love to work in India against China or anywhere else. So in general, I find when we run the industry, there's always some risk of anything. But in generally, we are very, very focused that 25% our energy to move to renewable energy, to be zero carbon, very, very focused on that. So we are doing everything is possible. Risk is always there, as you see, geopolitical, anything can happen. But by and large, we are in a position whereby literally there is nobody else is there. So we are in a great shape.
All right, Mr. Agarwal, thanks very much for joining us here on the CEO Centimeter. We wish you the very best of luck. Appreciate your time. And thanks for joining us this morning.
Thank you. Thank you very much, Shereen. All the best.
Thank you. With that, it is time for us to wrap up this edition of the CEO Centimeter. From all of us here, goodbye. Many thanks for watching.